Hello and welcome to Stock Watch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none are relied upon as any form of personal advice. Go Market Securities does not know your personal scenario nor your personal financial goals, and therefore none are relied upon as any form of advice at all. It is just general in nature only. Final part of the bank earnings previews, and that's Westpac. It is reporting on the 9th, and again, it's always the last out, because it's got a lot to tell you. And I think it's going to have to tell you some really interesting things about how its cost program is going. Under Peter King, it has been a big review about trying to get Westpac back into a level that is much not just stable, but actually growing. Looking at around technology, looking at around waste and that side of it, and then dealing with the fact that the ramifications from the AusTrack scandal are probably far from over. I think you need to point that out very clearly. There is a lot still to play out in that space, and they will have to provision for that further. Then it's just down to what all the banks are having to deal with. Net interest margins. Have they had to cut numbers to actually become a bit more competitive? Westpac have always been a little bit slow on that front because they are so highly exposed to the New South Wales market, which has been a market leader for them, but over the last year it's actually been a drag. Do they also look into the overall business as a whole? Their private bank's been pretty sluggish. The stuff over in New Zealand, same problem. They haven't really seen any sort of major expansion into the business world either. All that needs to be put down as what the strategic direction of Westpac is going to be. But again, getting back to what we need to look here is that what does cash earnings look like? Is it growing or is it getting stagnant? Do we also start to see bad and doubtful debts pick up like we are with others? That should be the given, but it will be in the personal side rather than the home loan side. The difference is that Westpac is, as I said, exposed to the upside in New South Wales, but also to the downside, and that's where a lot of the pressure is likely to come from. So watch what goes on with Westpac. There is a reason it is trading at the biggest discount to the other four, and for that reason, it has to do something quite interesting to really get this market idea that is the laggard out of the big four and the banking space in whole.